All right, hola guys, que paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's do a quick update on the current wave count of where we are in Bitcoin. So I've been sharing these charts and discussing this with the Discord group all this morning. Several charts. I just wanted to kind of give you guys a little taste here on YouTube of what we're looking at. This is the current algorithmic wave count from 2021. Over here is 2021. This is December of 21, this wave count, and here we are today. This is our current wave count in 2025. As you can see in both, we're coming down from the all-time high of the cycle. This is a regression trend. This is a distribution from a mitigated all-time high, which was the double top that we had. And this is what it looked like in 2021, as you can see. So this is subcycle B of 2021. And the fractals are playing out algorithmically to a T. We've been tracking these two schematics since the beginning of January. And we've just been calling it. We've been calling every redistribution kind of like clockwork. If you don't believe that, go back and look at all the videos just from the past few months and you'll see. So like I was sharing with my group this morning, as far as I'm concerned, these schematics are still in force. They're still valid. And until we have a very good reason to invalidate them, we're going to continue going off the cycle, the past cycle, the 4-year cycle. So price action repeats itself every 4 years or so, between 3 to 5 years, algorithmically. Not exactly, but in a very broad general sense, enough to where if you're a swing trader, that is, if you hold positions from 2 to 6 weeks, these come in very, very handy. It's really all you need is the algorithm for that. I kind of liken it onto finding a diamond. You have to go digging for it. It's not easy to find, but once you find it, it's a pretty good compass. I like it to think of it as a compass, so you don't get lost. So catalytic events such as Federal Open Market Committee announcements, and whenever the president tweets, or whatever you call it now, whatever they do on X, Elon Musk and Trump, and the news with China and Israel, Gaza, and just a million and one things, the trade wars and the tariffs, all of that stuff is like catalytic events, right? That catalyze the markets. Market makers use them to stir the emotions of retail traders and amongst themselves. We've already established that market makers fight amongst themselves, not just with retail. Retail's easy, dumb money is easy. That's just liquidity. That's just food, But there's also other strong hands that they try to outfox each other, because the name of the game is liquidity. The name of the game is the translocation of liquidity, and so they're going up against each other too. And so that's really what drives the markets. But all of that activity is the purpose of it is to gather liquidity, and the liquidities are in areas that historic areas in the algorithm, that the algorithm is coded into sweeping the liquidity into the voids, the upper voids and the lower voids. Just like nature seeks to fill voids or vacuums, anything in nature like water will seek to fill a vacuum, air, whatever. And price action, it's very, very similar. The price action always seeks to mitigate the voids to the top and to the bottom, and those are the key areas where the liquidity pools sit. And so the algorithm's programmed to raid those zones. And so and when you step back, when you scroll out and you get on a higher time frame, the patterns that are drawn from those liquidity sweeps and those the waves, which is delineated by the Elliott waves and the corrections and the flats and the zigzags and all that. When you scroll out far enough, that's when you get these familiar shapes and geometric patterns that we identify as tops and bottoms and double tops and double bottoms and Adams and Eves and bull flags and rising wedges and channels and all that stuff. All of that is the algorithm seeking out liquidity, and it's fueled through the manipulation of the exploitation of emotions. So the algorithm comes in very, very handy because that's like the roadmap, as it were, of where these of where the of where we can expect the market makers to spur on retail and other traders. And so we can look at the wave count. And so like we said, this is 2021, and this is the current. The wave count is the same. We've marked down. We've distributed from this all-time high, the series of redistributions, LPSYs, and we've come under this ice barrier, the first ice barrier. That was here. The ice, of course, the anchored VWAP, which we anchored to the PSY. This is the preliminary supply area before we had this Trump pump coming up, and where the stoppage supply started to come in. This is where we anchored the volume weighted average price, just south of that. So we get the calculation of the volume versus price throughout the entire schematic. So that's this first pale blue line. It's the anchored VWAP. I call it the ice. The ice. Okay. And so we see that here is where we mark down from this redistribution, and this by marking down here, it really established that this has a bearish bias, that it established this regression trend on both of these schematics. And it's just amazing that even though we had with the VSA, we had predominance of supply, so many traders and so many I want to say experienced analysts that you see, very prominent analysts with hundreds of thousands of subscribers, were bullish here, bullish. And that's simply just because they don't understand the algorithm. They don't understand the established patterns that have been delineated, that have been identified and been playing out since as long as recorded price action has been in effect, as far as, for traded assets, as long as humans have been trading things on the open market. These are the visual representations of the exploitation of fear and greed. And by breaking the VWAP here, we at last there's conclusive evidence that the overarching bias or sentiment from now on in this is going to be bearish. And so we had that, and of course it continued on, and as you know, we called it all throughout here, and then we called it, especially with the break in the ice, and then we had this. Now you look, I've kind of enumerated some of the Elliott waves. Now these are zigzags. Okay, now those of you know Elliott wave principle zigzags are 535 patterns. So you have a 535. Here's an Elliott impulse 535, and then a 3 is an ABC. So we have the 1 through 5, the ABC, and then we have another 5. But these waves are small, so I didn't bother cluttering it. But the 1 through 5 is here, and then we have another ABC, and then a 1 through 5, and then a 5 down, and then we started this kind of like this wedge-like or this parallel structure. Now that was 4 years ago, and then we looked at a corresponding wave trajectory in this regression trend for this year, and we have the 5. Remember? That's this, the 5. Here's the 3, the ABC. Now the swaps this year are much more aggressive than last year. And we talked then 4 years ago, and we talked about this in other videos, how the bulk majority of the wave play out stayed beneath channel midpoint here. But here we see the C waves going all the way up. It did it twice, going all the way up to sweep the liquidity right under this ice barrier here, the first ice going up. And so that faked a lot of people out, where they thought suddenly there was a reversal. This is where a lot of people get liquidated. Billions of dollars get liquidated in these sweeps here from these C waves going up to sweep the upper ice. And then it happened again here. In contrast, in 2021, the sweeps were not that dramatic, were not that extravagant. Everything stayed beneath the midpoint here, and it wasn't until where we are now, where we actually broke the midpoint and we came out to to approach this this would be the macro trend resistance line. So we had these two sweeps, and then we had the 5. That's this, the 1 through 5 impulse. We see it repeating, ending down here, and then starting this parallel kind of slanted trajectory, which is really like a wedge. And then these waves can be counted as well as to where we currently sit now. You notice we have a second ice. This is a dark blue ice, and this is also an anchored VWAP, but this goes even further back. This goes to the all-time. This goes to the buying climax of the previous. Well, in 2021, it was the high of this accumulation range here. I'm sorry, I anchored it to the deep spring, or to the terminal shakeout area. That was the source of this one. And then for this year, we kind of did the same thing. We went to the deepest point of this accumulation. See where this triple bottom here. This was a triple bottom as well. So algorithmically, even the bottoms are playing out in this cycle, because the algorithm encompasses the entire cycle. It started back in when we bottomed out at 16,000. We've been tracing it since then. Now we're here, and you see same area. We've come up, and we've hit the ice, the dark blue ice, the second anchored VWAP, and then of course I trimmed the replay bars, but we could see, you already know what happened after this. This is kind of like where we are now. We came up, and we're kind of hugging this anchored VWAP. Now in 2021, it wasn't able to hold, and we had a retracement back into the regression trend. It's going to seek out this midpoint again, and then of course we know, just because we know we know what happened in retrospect, this thing just kept distributing, right? So that was it. That was the beginning, or rather, it was the confirmation. I believe that this was the beginning back up here. This is really the litmus test as far as I'm concerned of the bears versus the bulls. If the bulls weren't able to stay afloat above this first ice barrier, then it wasn't going to be pretty, and indeed it came down. Well, we've already broke through that here, so now and then we've gone through the second ice, like we went through here at this first part of this zigzag. This 5 came down, but then just like we did 4 years ago, we came back up like here, and then back down again after these liquidity sweeps, and now back up again here. So this now, guys, this is really important now, because if we're still going to follow the same algorithm, then this is like Custer's last stand. This is like the Gettysburg right now of this regression trend. If this second ice barrier can't hold the bulls, which it looks like it's not. I mean, we're having predominance of supply, and then despite all of these big prominent volume spikes in demand, where it's producing failures to rally above the ice. See here, all these buy orders here got stopped out by the ice. Here's another big buy order bar stopped out by the ice. And not only that, it's hugging now this anchored VWAP, and now we're seeing supply build. And if you notice, every time after it makes this prominent spike and gets rejected, demand just shrinks back down to like beneath, like below average. And so, yeah, this last one, it just got rebuffed. Look at this. Back then we had we had kind of like shooting star wicks up above. Haven't really seen too many of that yet, but it's possible that this is, yeah, we may make, like I said, like this was very, this is very aggressive this year, just because of all the liquidity and all the manipulation coming out of the White House and all over the world. But I do think that the writing's on the wall. I do think that it's just a matter of time before this ice barrier breaks and we go back down, at least to mitigate these 5 waves down here, this low. That would prove to be a triple bottom, but then we would have to have a significant reversal atop these 2 ice barriers. I don't really see that happening unless the geopolitical and the economic climates change in the next few weeks. But as far as I know, Trump's still going through with the tariffs, and now there's a whole bunch of stuff going on with Iran, and so yeah, it's just not looking good. All the vandalism with Tesla, and it's just right now there's just a lot of civil unrest, and I think more is coming. I hate to be the bearer of bad news, but I think that, I think all this is setting the stage to fall in line with the algorithm, and I do think that we're due for a correction as far as like a 70% correction, like a full-blown bear market. I don't know yet if that's what's in store, but algorithmically it seems like that's what may be coming. So can't say for sure. We're just going to have to just keep watching it. I watch this stuff just like you guys. I don't have a crystal ball. I count the waves. I try to go off the algorithm, the fractals, the volume spread analysis, the macro Wyckoff schematics, and volume price action. And just to get further confirmation, we'll just measure the trajectories with the Fibonacci extensions and retracements and just see what we come up with. So far, everything is jibing algorithmically. Everything has been jibing since January, like we talked about. And I don't know if that's going to continue, but so far it looks like it has. And I can't find anything that has invalidated the macro trajectory of what we're on to prevent something like this from happening. I think it's just a matter of time. Once those liquidity voids get taken out and there's enough capitulation atop the ice barrier, like here, then I think we're going down. There may be some more liquidity grabs, perhaps up to this first ice barrier, like we saw with these previous ABCs that swept this area up here. That's if we go all the way. I don't even see it going up that far. I just don't see the demand coming in. I don't know where that demand is going to be produced. I'm just not seeing it so far. It doesn't mean it can't happen. I just don't see it. If it does happen, it'll be an anomaly for sure. It'll be an aberration of the of the norm. Certainly algorithmically, it would be odd at this point. But this is Bitcoin, and Bitcoin's brutal. It takes no prisoners. So keep watching it. I'll try to keep you guys safe. Check out our Discord group if you'd like to take your trading up another notch. It's a wonderful, vibrant community, very friendly, user-friendly. New traders are welcome. Learn to read charts the right way: volume, price action, VWAP, trend line, trading range lines, and such. And just read the charts the way the whales read them, the banks, the hedge fund operators, all those guys, the bankers. So that's what I endeavor to teach in my Discord group. Subscribe if you haven't subscribed. We'll continue to keep you safe. I'll try to. And with that, I'll let you guys go. God bless you. God keep you. Make his face shine upon you and give you grace. All right. Whether or not you believe. Hey, I'll leave that up to the Lord. I'm not judging you. But do allow me to bless you. So that's what I'm doing now. So thank you for subscribing. We'll talk to you guys soon. And none of what I said is financial advice, but something tells me you already knew that. All right. I'm out of here. Adios. Bye-bye.